Close your eyes for a moment. Picture this. You're sitting in front of your trading screen. The chart's a swirling vortex of green and red, each flicker a whisper of opportunity or a scream of loss. Your heart thrums a frantic rhythm against your ribs, a drumbeat echoing the market's pulse. Your hand hovers, trembling slightly, over the mouse, poised to execute the perfect trade. And then, in that agonizing, critical instant, when every fiber of your being screams for action, you freeze. The moment passes, the opportunity vanishes. Sound familiar? That gnawing frustration, that inexplicable paralysis, despite all your hours of study, all your analytical prowess. What if the biggest obstacle to your trading success isn't the market itself, with its unpredictable twists and turns, but something far closer, something insidious and deeply personal? What if the real war isn't being fought on the charts, but within the confines of your own mind? Right now, a staggering 95% of traders are losing money, not because they lack intelligence or because they haven't devoured every book, every course, every indicator known to man. No, their struggle is far more profound. They're fighting a silent war, an internal battle against deeply ingrained psychological patterns that sabotage their every move. They're caught in a labyrinth of fear, greed, hope, and regret, emotions that twist their perception and paralyze their execution. This isn't just about theory, it's about a revolution in how we approach the markets, a paradigm shift that reveals the true battleground of trading success. It's about understanding that the market doesn't care about your hopes or fears, your analysis or your dreams. It simply is. The only variable you truly control, the only force that can consistently tip the scales in your favor, is your own mind. And once you master that, the market, once a formidable adversary, transforms into an endless ocean of opportunity. This journey isn't about finding the next magic indicator or the perfect system. It's about uncovering the hidden saboteur within, the unconscious beliefs and emotional responses that dictate your trading fate. It's about learning to navigate the treacherous currents of your own psychology, to build a mental framework so robust that fear and recklessness become relics of a past self. We're about to embark on an exploration that will challenge everything you thought you knew about trading, revealing why the most brilliant analysts often fail and how seemingly ordinary individuals achieve extraordinary success. Prepare to confront the uncomfortable truths, to dismantle the illusions, and to finally understand the true nature of the game you're playing. Because once you see the silent saboteur for what it is, you'll realize that the power to win has been within you all along. This is the story of the hidden war and how you can emerge victorious. The illusion of control. Why prediction fails. For years, the trading world has been obsessed with prediction. We chase the holy grail of indicators, the perfect chart pattern, the insider tip that will tell us with absolute certainty what the market will do next. We believe that if we just knew enough, if our analysis was just sharp enough, we could conquer the market. But what if that belief, that relentless pursuit of certainty, is precisely what's holding us back? What if the more you try to predict, the more the market seems to defy you, almost as if it's mocking your every calculated move? This is the illusion of control, a seductive but ultimately destructive fantasy that traps countless traders in a cycle of frustration and loss. The truth, a truth that might sting at first, is this: the market doesn't owe you anything, not a single penny, not a winning trade, not even fairness. When you experience a loss, it's tempting to say, the market took my money, or the market stopped me out. But the market didn't do anything to you. The market simply is. It's a neutral mechanism, a vast impersonal arena where prices are discovered and wealth is transferred. Nothing more, nothing less. Every dollar you make comes from another trader's loss. Every dollar you lose goes into another trader's pocket. This is the zero-sum game you've entered, and understanding its fundamental nature is the first step towards liberation. Consider this. Right now, millions of traders worldwide are looking at the same charts, analyzing the same data, and drawing wildly different conclusions. Each sees a unique opportunity based on their individual beliefs, fears, and expectations. Your meticulously crafted analysis, your perfect setup, means absolutely nothing against the collective, often irrational actions of all market participants. A central bank can intervene with a surprise announcement, an algorithm can trigger a cascade of orders, a large fund can liquidate a massive position, or a single, well-capitalized player can move the market enough to invalidate your entire thesis. Your perfect analysis, your hours of backtesting, your unwavering conviction, it all means nothing in the face of this overwhelming, unpredictable force. The market can do anything at any moment. This isn't a flaw in trading. This is trading. The market is a dynamic, chaotic system, constantly evolving, constantly surprising. Once you truly accept this, once you internalize the profound truth that anything can happen, you stop trying to predict and you start learning to react. Your analysis transforms from a quest for certainty into a tool for identifying probabilities. You begin to understand that an edge isn't a guarantee of a win on any single trade, but rather a statistical advantage that plays out over a series of trades. The best traders have evolved to a point where they believe, without a shred of doubt or internal conflict, that anything can happen. They don't just suspect it or give lip service to the idea. Their belief in uncertainty is so powerful that it actually prevents their minds from associating the current market situation with the outcomes of their most recent trades. By preventing this association, they keep their minds free of unrealistic and rigid expectations about how the market should express itself. Instead of generating the kind of unrealistic expectations that more often than not result in both emotional and financial pain, they have learned to make themselves available to take advantage of whatever opportunities the market may offer in any given moment. So, if prediction is a trap, what's the true path to consistent gains? The answer lies not in what the market will do, but in how you react, how you adapt, and how you master the only variable truly within your control, yourself. The mind's labyrinth, unpacking psychological traps. Have you ever found yourself in a trade, a perfectly good setup, only to hesitate at the last second, watching in agony as the price moves exactly as you predicted, but without you? Or perhaps you've jumped into a trade too early, driven by an almost irresistible urge not to miss out, only to see the market immediately reverse and punish your impulsiveness. And what about those losing trades, the ones you knew deep down were going south, but you held on to, rationalizing every tick against you, whispering sweet nothings to yourself about a turnaround that never came? These aren't just isolated incidents of bad luck or poor judgment. They're symptoms of a deeper, often unconscious, mental framework, a labyrinth of psychological traps that ensnare even the most intelligent and well-intentioned traders. One of the most insidious traps is the fear of missing out, FOMO. It's that gnawing anxiety that grips you when you see a stock soaring or a currency pair making a massive move and you're not in it. Your rational mind screams caution, but an almost primal urge to be part of the action overrides everything. You jump in, often at the top, just as the smart money is exiting, only to become another casualty of the market's relentless efficiency. This isn't about greed in the traditional sense. It's a fear-based reaction, a desperate attempt to avoid the pain of regret, the feeling that you've been left behind while others feast. Conversely, the fear of loss can manifest as hesitation or cutting winning trades too early. You've done your analysis, the setup is perfect, but the memory of a past painful loss looms large. You hesitate, second-guessing yourself, waiting for an extra confirmation that never comes or comes too late. Or, once in a winning trade, the fear of giving back profits becomes so overwhelming that you exit prematurely, leaving significant gains on the table. This isn't about protecting capital, it's about avoiding the emotional discomfort of seeing your unrealized gains diminish, even temporarily. The irony is, by trying to avoid a small loss, you often guarantee a missed opportunity for a large gain. Then there's the subtle art of rationalization. When a trade goes against you, instead of accepting the loss and moving on, your mind, in its infinite capacity for self-preservation, begins to construct elaborate narratives. You might blame external factors, find obscure news articles that confirm your bias, or even invent reasons why the market must turn around. This isn't a conscious deception. It's a subconscious defense mechanism designed to shield you from the pain of being wrong. But by refusing to acknowledge reality, you prolong the agony, turn small losses into catastrophic ones, and prevent yourself from learning crucial lessons. You're not trading the market, you're trading your beliefs about the market, and those beliefs, if unchecked, can lead you down a path of self-sabotage. These psychological pitfalls are not signs of weakness, they are deeply ingrained human responses to uncertainty and risk. The market, with its constant fluctuations and inherent unpredictability, acts as a powerful amplifier for these biases. Until you understand that these aren't just bad habits, but symptoms of a deeper, often unconscious, mental framework, you'll remain trapped in self-defeating patterns. The good news is, once you identify these traps, you can begin to dismantle them, paving the way for a more disciplined, objective, and ultimately profitable trading journey. This understanding is the first step towards rewiring your brain and building a probabilistic mindset. Rewiring the brain, building a probabilistic mindset. Imagine trading with an almost serene detachment where wins and losses are just data points, not emotional roller coasters. Picture a state where the market's wild swings don't trigger panic or euphoria, but simply present new information to be processed objectively. This isn't a fantasy. It's the reality for elite traders who have mastered the art of probabilistic thinking. This profound shift in perspective, championed by Mark Douglas, is the cornerstone of consistent profitability, liberating traders from the tyranny of prediction and the agony of emotional attachment. The core of probabilistic thinking lies in accepting the inherent uncertainty of the market. It's the understanding that while any single trade can result in a loss, over a series of trades, your statistical edge will play out. Think of a casino. Does the casino know which specific bet will win or lose? No. Do they need to know? Absolutely not. They make money consistently because they have a statistical edge that plays out over a large number of bets. They understand that the distribution of wins and losses is random. You might have 10 losses in a row, followed by 20 wins, or vice versa. The sequence is unknowable, but the overall probability, the edge, remains constant over time. This acceptance of randomness, combined with an unwavering trust in your edge, is what allows professional traders to operate without fear. This mindset frees you from the need to be right on every single trade. When you internalize the truth that anything can happen and that there's a random distribution between wins and losses, individual trade outcomes lose their emotional charge. A losing trade isn't a personal failure. It's simply one outcome in a series, a necessary component of your overall edge playing out. This detachment prevents your mind from associating the current market situation with the outcomes of your most recent trades, thereby eliminating unrealistic and rigid expectations. Instead of generating the kind of expectations that often lead to emotional and financial pain, you learn to make yourself available to take advantage of whatever opportunities the market may offer in any given moment. Building a probabilistic mindset involves several key shifts. Embracing uncertainty. Acknowledge that the market is a dynamic, unpredictable entity. Let go of the need for certainty and embrace the reality that anything can happen at any time. Focusing on process, not outcome. Shift your attention from the outcome of a single trade to the consistent execution of your trading plan. If your process is sound and your edge is valid, profitability will follow over time. Defining your edge. Clearly identify what gives you a statistical advantage in the market. This could be a specific setup, a risk management strategy, or a unique analytical approach. Your edge is your business plan. Accepting small losses. View small losses as the cost of doing business, a necessary component of trading. They are not failures, but rather feedback that helps you refine your approach. Thinking in series. Evaluate your trading performance over a series of trades, not on a trade-by-trade basis. This broader perspective helps smooth out the emotional highs and lows. This shift in perspective isn't just intellectual, it's a profound transformation that reshapes your entire trading reality. It's about moving from a reactive, emotional approach to a proactive, disciplined one. It's about understanding that while you can't control the market, you can absolutely control your response to it. And in that control lies the true power to unlock consistent profitability. This mastery of the mind is what allows traders to enter the elusive state known as the zone. The zone, where confidence meets consistency. What if you could enter a state where every decision feels automatic, where the market seems to bend to your will, and where consistent profitability becomes not a struggle, but a natural byproduct of your actions? This isn't a pipe dream, it's the zone that elite traders inhabit, a state of effortless execution and unwavering confidence that transcends the typical emotional roller coaster of trading. It's where the principles of probabilistic thinking and self-mastery converge, allowing you to operate at your highest potential. Reaching this elusive state isn't about luck or innate talent. It's about internalizing the fundamental truths of the market and developing a consistent, objective approach. It's about building a mental framework that allows you to perceive opportunities clearly, execute your plan flawlessly, and manage risk with surgical precision, all without the interference of fear, greed, or hope. In the zone, you are fully present, fully focused, and completely aligned with the flow of the market. Time seems to slow down, decisions feel intuitive, and every action is executed with a sense of calm certainty. How do traders cultivate this state? It begins with a deep understanding and acceptance of the market's inherent unpredictability. When you truly believe that anything can happen, you stop being surprised by unexpected moves. When you understand the random distribution of wins and losses, you stop taking individual outcomes personally. This intellectual understanding then translates into emotional detachment, allowing you to view each trade as a statistical event rather than a personal test of your worth. Key elements to cultivating the zone include absolute self-responsibility, accepting that you and only you are responsible for your results. The market doesn't cause your losses, your decisions and reactions do. This empowers you to change what needs to be changed. Objective observation. Learning to observe the market without emotional bias. This means seeing what is, not what you want to see. It involves detaching from the outcome and focusing solely on the process. Consistent execution of an edge. Having a clearly defined trading plan, your edge, and executing it flawlessly, trade after trade, without deviation. This builds confidence and reinforces positive mental patterns. Risk management as a priority. Understanding that protecting your capital is paramount. Defining your risk before entering a trade and adhering to your stop-loss levels without hesitation. This eliminates the fear of catastrophic loss. Emotional regulation. Developing the ability to recognize and manage your emotions in real time. This isn't about suppressing emotions, but about preventing them from dictating your trading decisions. Mental rehearsal and affirmation. Regularly practicing positive mental states and affirming your commitment to disciplined trading. This helps to hardwire the desired behaviors into your subconscious. When you consistently apply these principles, you begin to experience a profound shift. The market, once a source of anxiety, becomes a playground of probabilities. Losses become mere tuition fees, and wins are simply the natural manifestation of your edge. You develop an unshakable confidence, not in your ability to predict the market, but in your ability to execute your plan and manage yourself within its unpredictable flow. This confidence isn't born from a string of wins, it's born from a deep understanding of yourself and the market. A mastery that allows you to remain calm and objective regardless of external conditions. But reaching this level isn't a destination. It's a continuous journey of self-mastery, a lifelong commitment to refining your mental game. We've journeyed through the hidden war, explored the illusions of control, navigated the labyrinth of psychological traps, and discovered the power of a probabilistic mindset. We've glimpsed the zone, that elusive state where confidence meets consistency. But as we conclude this exploration, remember this fundamental truth. The market will always be there, a boundless ocean of probabilities, constantly offering new opportunities. The real question, the one that truly matters, is not what the market will do next, but rather, will you be ready to seize them? The path to consistent profitability is not a sprint. It's a marathon of self-discovery and continuous refinement. It's a journey that demands introspection, discipline, and an unwavering commitment to mastering the only variable you can truly control, yourself. The market doesn't care about your past failures or your future aspirations. It only responds to your present actions, dictated by your present mindset. Every trade is an opportunity to practice your discipline, to reinforce your probabilistic thinking, and to strengthen your mental fortitude. Every loss is a lesson, not a defeat, pushing you closer to understanding the subtle nuances of your own psychology. So, as you step back into the arena, carry these insights with you. Understand that the external chaos of the market is often a reflection of internal turmoil. Cultivate a mindset that embraces uncertainty, focuses on process, and views wins and losses as mere data points in a larger statistical game. The journey of a successful trader is one of continuous evolution, a constant shedding of old beliefs and the adoption of new, empowering perspectives. The future of your trading is not predetermined. It is unwritten, waiting for you to shape it with every disciplined decision, every objective observation, and every moment of self-mastery. The power to transform your trading, to unlock consistent success, lies not in predicting the market, but in mastering the mind that trades it. The choice, as always, is yours. Will you continue to fight the market, or will you finally win the war within?